I just want to sell the euro pound dollar currency pair, the euro British pound currency pair in a zone of 08001, okay, 8001, all right. Why do I want to sell? Okay, very simple. The price D below this key level, the red line here, you can see D below that key level, and it's retesting it here, all right, on the hourly charts, okay. Stay tuned, all right. Going to go now to the 5-minute time frame to monitor the reaction of the price on here, that level of 8001 or 0.8001. I prefer to say 8001, all right, but here it is, all right. So I'm looking for opportunity to sell the euro GBP in this zone, all right. I have other reasons why I want to sell this currency pair. We're going to go now again to the hourly chart, okay. So here we are, the price went up, yes or no? So it went up on this daily chart. It went up to this point here. So bullish progression, displaying high lows, high up to this point. And then we see a consolidation in this session. The price was acknowledging a resistance level in this zone on the hourly charts, okay. So whenever we have a channel like that, we want to know that if the price consolidating, the price is acknowledging the median line of the consolidation. This is the level that professional watching 8080, all right. Here it is. It's the median line on the hourly chart. So now the price, so according to the wave principle, all right, we know that the minimum price move is free. So not the maximum, because when we say minimum, sometimes traders are thinking of maximum. The minimum price move is free. So price went down, 1, 2, 3. That's the minimum price move. Minimum price move is free. So if we have minimum price move is free, and the price find a resistance below that level, it means that the down move here will continue. Minimum price move is free. Normally, using this interpretation, minimum price move is free. If the bearish move here will stop here, all right. Stay tuned. The price should go back up, okay. So if there is no bearish momentum beyond this level of 7965, the price will change direction here and just go back up, because the minimum price move is free. So after free move, either there is a reversal, all right, or we may have a continuation, all right. If there will be a reversal, this will be a definitive support level for this 1, 2, 3, all right. But because but if the price find a resistance here, it means that this move down, this bearish trend will continue. Am I making sense to you? Because it's lunchtime in London, it's past lunchtime, I'm feeling a bit hungry now. Am I making sense to you? Okay, I need to repeat this. Maybe you understand it already. If you understand it already, don't think that I'm repeating myself too much. I'm just doing it because some trader may not understand it. So if you already understand what I said, that's okay. Just switch off for a while, because I'm going to repeat myself again, okay? Now, according to the area wave principle, the minimum price move is free. So whether it's going up or down, okay, the minimum price move is free, okay? Free waves, all right? Whether in correction or in a multi-wave, okay? So we can use that in a different way. So This is what I'm saying. The reality of the market and the application of the wave theory, okay? So how do we use it in the market to make decisions? How do we use that information to pinpoint, okay, high probability trading setup? So if the minimum price point is free, it means that it can go beyond free. So when the price goes up or down after 3 waves, we draw a line there. So the price can change direction here and just go back up completely. All right. If the bullish momentum or the bearish momentum has finished. So this move 1, 2, 3 down. If the bearish momentum has finished here, the price will just go back up because the minimum price move is free. But if it's not finished, how do we know? Probably try to retest the prior low, the low before the last low. 1, 2, 3. This is the low before the last low. The price will try to retest that low, and if you find a resistance there, well, it means that the bearish momentum will continue. But the challenge for this bearish progression is this low here. Are you with me? So that's why the price went up. Now we see consolidate here. Now it came down 1, 2, 3. Minimum price point is free. We draw a line there. If there is no more demand to sell, okay, the price will just go up, which means if it goes above 8001 and find a support, we can buy it and bring it back up because the bearish momentum has stalled. But if the bearish momentum is intact, we will see a resistance somewhere near this prior low, the low before the last low. That said, my friend, you understand what I'm trying to do here? Applying the wave theory for day trading purposes, all right? Minimum price move is free. And looking for an opportunity to sell the euro British pound near the level of 8001. All right? So I'm going to remove my lines to clean my chart a bit. All right? So far, I'm not yet in this trade. What usually takes place, traders will very often will go and just place a trade to sell or to buy. Okay. Sometimes it may work, sometimes it may not work. So all I'm doing now, I'm just waiting for a clear-cut indication that the price is about to go down, then I will sell. Okay. But I want to sell somewhere near this level, okay? Near the red line here, okay? So I'm going to zoom into it. Now I'm going to go to the 3-minute time frame. So what I'm doing, I'm combining the hourly chart and the 3-minute time frame. I'm now on the 3-minute time frame. And here we are again. What do we see? The minimum price move is free. Price went up. Here it is, my friend. Now, in fact, hold on, please. I need to place a trade here to sell the Euro GBP at 7989. That's my limit order there to sell. Okay, so I place a limit order. This is not a market order. This is a limit order. So when the price reaches this level, okay, then that order will be filled. But if it's changing direction here, start going up, this order here will not be filled. So I'm not in the trade when it's going up, which is great because I want to sell. So the limit order, as you can see here, is changing direction. But I want it to come here to fill this order, okay? So what can we see on the 3-minute time frame? Okay, so on the 3-minute time frame, we see again 1. So here it is, 1, 2, what? 3, yes or no? So we will say again on the 3-minute time frame, the minimum price move is free. So price go 1, 2, 3 to the resistance level 8001. Okay, so we will say, all right, if the bullish, if the bullish momentum has stalled, all right, on this time frame, we will see something like this: a high before the last high. Remember, the other one I will show you on the hourly chart, the price was going down, so we were talking about the low before the last low. But because here the price was going up, we will say the high before the last high. So our expectation that the price will be below this high, this. Are you with me? The prior high, the high before the last high, break below, retest, and turn around. So, if the bullish momentum is intact, here it is, it breaks below the prior high, now it's retesting here. Great. So, if that bullish momentum is intact, okay, it's still robust, the price will find a support here and continue to go up because the minimum price move is free. All right. If the bullish momentum is intact, it must find a support above the prior high and then continue to go up. Yes or no? Okay, display higher lows, higher high. But if the bullish momentum is weakening, all right, the price will return back below the prior high, fail to find a support, and I want to sell it right here at 7989 using a limit order. This is about the application, a live application of the wave principle. So recently I have been talking about tips and tricks about wave principle trading. And last time I recorded a video for 1 hour. I hope you have watched the full length of that video when I was going through all the emotions, the ups and downs, and sharing with traders okay, the experience of applying okay, the wave principle in real time for trading. And I was telling traders that the bottom line in trading is to make money. Another way to say that is not to lose, all right? Not to lose. I've seen it when traders finally get that message clear, not to lose. They do not overtrade anymore, and they do not take useless trading setup, all right? And they do not trade useless financial instrument, okay? They become very, very defensive, and just becoming a little bit more defensive, more protective. Okay, one is improving. Very simple, it's just improving because it's not easy to earn money, so don't give it away easily. All right? It's your money. If you're not making money, keep it in the bank. That's my recommendation for traders. So, and in fact, you can quote me on that. I just say that. Okay, all right. Because sometimes, contrary to professional traders that are very careful about how much they are losing, all right? Ordinary traders do not bother about it. So, if you're losing 100 pounds every day, in 10 days, you lost 1,000 pounds. Okay? All right? As you keep doing it, it will build up over the years. So, if you have been trading for 5 years, and you just keep giving money away over the years, you are transferring your wealth away, all right? Though losing trade, okay, can happen, we don't want to accumulate losses, all right? This is what I'm just trying to get into traders' mind. Become a little bit careful, become a little bit, okay, defensive, all right? That's all. So, you see what we are doing? We are doing limit order, all right? Expecting it. If it's come here, though, it means that somebody is selling it. You understand? So I don't want to be the first person to sell. Somebody is selling it. So if you come all the way here, because normally you should find a support here. So if you dip all the way come here, it means that no one wants to buy here anymore. So somebody is pushing it down, and I want to join them. That's what I'm doing. I just want to join them. Okay? Just want to join them here to sell. So let's stay focused. Going back again today. Hourly chart. I want you to get this. The interpretation of the wave theory is one thing, all right? And the application of the wave theory, the wave principle. So, minimum price move is free. But here it is. Everybody knows this, okay? But now, how do you interpret that is one thing, and how do you apply it is another. So, I'm looking on my hourly chart for the Euro GBP. I see that the price went up from A to B. Here it is, went up. And forming consolidation here, now dropping 1, 2, 3. In my mind, it's clicking straight away. I see minimum price move is what? Free. Well, I draw that line there. I'm watching. Okay? Either we have a reversal, all right, after 3 moves, a reversal, or a continuation. For a continuation to take place in a downtrend, we must have a resistance. Very simple. And the resistance at the prior low, the low before the last low, must find the resistance there, and we will see down. Okay? In fact, my expectation, which the price does not have to fulfill, is that this pair, you see, this is what we call it's quite. You see, if you divide this, see how the price went up, it stopped the highest from the low, you divide it like this. The price is likely to go down as much as this one here. This section here, there's a high chance. Please do not use this video for sell or buy signal. All right. This video is for educational purposes only. It's a high chance that it may go down all the way here. That remains to be seen. Okay. There's a high chance. Not a certainty, my friend. No certainty. Okay. High chance. Okay. So going down, tension to there. Key level. Symmetrical, you see, when up like this, going to go down in the opposite way, down, ball, up, down. Okay, that's how. Okay, something like this, go down, and then when it comes to this session, try to do something like this. That remains to be seen. But if he's doing exactly what we're expecting, that's great. That's great, isn't it? This session here, this one here, will he do it? That's the question. So if he start going down, it comes to this point. Okay, we are careful. High chance that he may change direction up a bit. Will he continue to go down? All right. Will he come all the way here? This is just an expectation. Okay, hopefully. But we do not trade on hope. We trade on the price action alone. All right, everything is the price action until that time. Okay, am I being filled already? Let me go back to my amount hourly chart, so I may set my stop loss. Going to the 3-minute time frame. That's it, my friend. We are now in this trade at selling the euro pound at 7989. Here it is. We are on the 3-minute time frame. All right. So recently, I have shared also with traders. Okay, my most coveted. Is my pronunciation correct? Coveted or coveted? Coveted. All right. Now, traders always like my accent and they make a lot of comment about it, and I'm enjoying myself now. Okay. So I share my most coveted secrets or at 24 Elliott Wave YouTube channel, and I told traders clearly that for wave validation, it's better to use the ratio 1 to 22. So if you go to 24elliottwave.com, our website, the first video that you will see at the home page, that the video about the secrets, okay, about wave validation. So my order has been filled. Now look at that. The price came all the way here, filled my order. Now quickly start going up. Can you believe that? So what I'm going to do now, my friend, I'm going to set my stop loss. Okay. Well, 7989. I'll set my stop loss 20 pips or something like that. Let's go to the 10-minute time frame. Okay, I will use 21 pips. Okay, 21 pips for this trade. Place my stop loss right here at 80 10. We enter the trade at 7989. Placing my stop loss. Color my stop loss in turquoise at 8010. That's my stop loss. 21 pip for this trade. Alright. So it's also above that resistance that we are watching, okay, on the hourly chart, 8001. So my stop loss is behind it. I'm hiding. That's what traders do. They hide their stop loss behind a key level. All right. So whenever you're going to place your stop loss, find a key level. You want to hide your stop loss behind a key level. So you are day trading. What is the minimum? Okay. Stop loss that it is okay with you. Talking about your risk tolerance. Okay. What is the stop loss that is reasonable to you? All right. I cannot tell you to use 10 pip. I cannot tell you to use 20 pip because some traders may say to me, George, 20 pip is too much. Are you out of your mind, George? Use 5 pips. All right. Okay. So we are now in this trade and the price, okay. So now it went up above our entry point. If I don't like it, I can just close this trade and walk away. But I don't want to close it, okay? I'm sticking to my 21 pip stop loss. It's right here. And I'm not going to move my stop loss. Sometimes I do move my stop loss. All right? But for this one, I will not move it at all. Okay? If they kick me out, I'll just blink, 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 and then put it behind me. All right? This is to make you laugh, okay? Because we are talking, it's good to laugh a bit, okay? So we see now again on the I'm on the 10-minute time frame. You can see on the 10-minute time frame the price went down, okay, and then form a double bottom chart pattern. So because you may be wondering, George, it's no tree. No, it formed a double bottom chart pattern before 1, 2, 3. All right, I have a reason for it. One, from a double bottom chart pattern, yeah, you went around, okay, to the starting point. Then 1, 2, 3. So we say minimum price move is free. So we draw that line there. Minimum price move is free. So for this bullish momentum to continue, the price must find a support above the prior high and to go above, okay, this high here. You see, you can do that on any time frame. The minimum price move is free. So if I'm a double bottom price, 1, 2, 3. Now the challenge is, will it go above 8001? It's not going. So now it goes below the prior high. Our order is filled. But remember, we didn't do this on a 10-minute time frame. We were combining. Remember, this is what we say. Do not use one time frame. So for TSCW24, find a high probability trading setup. Can be 2-hour time frame, can be daily chart, weekly chart, even up to the yearly chart. But you're going to go to the first best time frame to enter the trend. All right. Another thing that we say to traders, we can use the TST signals as a fractal signal. What is a fractal signal? A fractal signal is a signal that is identical to the trading setup. What do I mean by that? So we see, for instance, I'll give you one example of fractal signal, okay? Moving average at 30 crosses above the moving average 50. It's a bullish moving average crossover. Moving average 30 crossing above moving average 50. This is a bullish crossover, okay? So we see that, for instance, on a daily chart, okay? Moving average 30 crosses above the moving average 50 on a daily chart. It's a bullish crossover. Now we go to the hourly chart and we are waiting for a signal, okay? Instead of using any type of signal, we use exactly the same moving average crossover. So on the hourly chart, our bullish signal will be again moving average, okay, 30 crossing above the moving average 50 on the hourly chart. So this is a type of fractal signal. For a TST trader, we will talk about, we see a triple green signal on a daily chart, and then we go, now we have to go to the first best time frame. And we will wait until we see a triple green on the first best time frame to enter the trade. In this case, we have a trading setup that is a triple green on the daily chart or on the hourly chart or on the 2-hour chart, all right, or on the 4-hour chart, okay. And then we go to the first best time frame, and we are taking exactly the same, okay, signal on the entry time frame to enter the trade. We have a fractal signal, okay, where the signal is almost identical to the trading setup, but one cannot use that method for overbought and oversold technical oscillators. What do I mean? So you can't go now, okay, to the daily chart and say stochastic is overbought on the daily chart. I go to the hourly chart, stochastic is overbought as sell. You do not talk about fractal signal when you are trading the overbought and oversold. There is another way to trade the overbought and oversold, which we have already posted at Trio channel and also on our website stochastic-macd.com. Click on stochastic or the pages that talk about stochastic, you'll see. Or go to dayprotrader.com, check the trading CCI, we talk oversold, overbought. There is a specific method to trade the overbought and oversold. So we cannot use, fractal signal when we are talking about overbought and oversold, okay? It makes sense? Okay, going back again to our main subject. Everything is right here on the hourly chart. Price went up, and then we have a consolidation. It went down 1, 2, 3. So we draw a line at 7965. We say, yeah, that's correct. We say, okay, if the bullish momentum, if the bearish momentum will continue, okay, the price might find a resistance here and break below this level and continue to go down. But if the bearish momentum has stalled, the price will find a support here and just go up, 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 which means minimum price move is 3. Price, the bearish momentum has finished. The price will change direction and just go up, 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 okay? But the challenge for this, bullish progression that is in place going up here on the hourly chart, it must go above the level of 8001. So now we are combining the hourly chart. So what I say to traders, okay, ratio 1 to 22. If we divide the hourly chart, which is 60 minutes, to 22, all right, the nearest time frame is a 3 minutes time frame. So that's why I'm happy to combine the hourly chart and the 3-minute time frame. Okay, so now on the hourly chart, you see this move up has been subdivided into 3, from here to here. Here it is, from here to here. It went up 1, 2, 3, yes or no? Minimum price move is 3. So the same rules that we are applying on the hourly chart, we are applying the same rule on the 3-minute time frame to enter the trade. So the minimum price move is 3. Okay, if the bullish momentum should continue, the price must go above the red line 8001. It's true on the hourly chart. It's true on the 3-minute time frame. Now my order is filled. Price went down. Now it's going back up again. You see now? It's now going back again, up. So trader may be thinking now of what? A cup and handle chart pattern. So, but I will not come out of this trade, okay? I told you I'm not going to move my stop loss, and I'm not going to change my things. Because sometimes other trader may force you to close a trade or to make other decisions. But you need to do your verification very well, and then just trade like a pro. Just trade like a pro, all right? No, it's not like, oh, now it's going up. Oh, now I should close this trade. Now I should buy. Okay, enter the trade, accept, okay, your stop loss, and then, okay, deal with it. If you don't like it, well, you can close it. But don't just buy because now it's going up like this. Then I'll say, oh, no, I'm going to lose now. I'm going to lose now. I don't want to lose. Okay, I'll close this trade. And then sometimes trader will close it like this, and then the price will go down. Okay, you understand, okay? So some trader will see this, they will say, okay, George, now we have a copper handle, okay, you call this as a handle, and then they will project it up here, and they pushing it, okay, probably they will hit my stop loss at 8001, but I'm not going to close the trade. All right, I'm not going to close it. Okay. If they take me out of my trade, well, I'll go back again to the hourly chart and review the trade and see, does anything change? Okay, fundamentally. Okay, did the setup changes? Okay. If it doesn't change, well, I'll wait again for another time when I can sell again. But remember, the key point for this trade is this red line. Now, if it goes above this red line and it finds support and start forming high lows and high, it means that, okay, it's now bullish. Are you with me? Because on the hourly chart, we say what? The minimum price move, all right, is free. But if it found a support above this level and start displaying high, lows, and high, it means that we have a reversal here. So though we may have a losing trade if we hit this level, and if we start displaying high, lows, and high above 8001, now we will become bullish. So this is why we say be ready to buy and be ready to sell. But we will only buy if we start seeing, okay, high, lows, and high above 8001. But so far, we were not going to move our posts at all. All right? So this red line is very important for us. It's now above it. Well, we'll see whether it's going to find its support and become bullish. All right? In that case, we can look for opportunity to buy. But right now, it's looking more bearish than bullish. So I'm not going to close that trade. Okay? It's not being courageous. It's just being, okay, paying attention to the price. So if they kick me out and I see high lows are high, well, game on. Okay? All right? Let's see how long we have been talking now, because I have a bit of time today. We have been talking now for 32 minutes. Can you believe it? 32 minutes, all right? Okay, it makes sense. So let's continue, because at one point I will have to pause the video to avoid that the video is too long, because I've been talking to you now for 32 minutes. All right? But let's see what's going to happen here, if they're going to take me out, so you can see straight away. And if I'm about to enter the trade for the second time, you may also know, okay, my next plan, okay? So I want you to see this video so you may see the reality of trading. So some of the things that you are doing before, you may think that, oh, George, I thought that was useless. Oh, no. Okay, so what I was doing is not that bad. Okay, you do exactly the same thing. All right, okay. So you have a bit of idea what's going on behind the scene, okay? I'm still here, okay? I'm still here because I'm just waiting to see whether they're going to kick me out of that trade or whether what's going to happen. That's why I'm waiting so you can see. I don't want to, I feel like pausing the video now, but because the price is quite close to my stop loss, that's why I want to stay here so you also can see what's going to happen, okay? So if you don't hear my voice, know that I'm still here, okay? Okay, now another thing we can say, euro dollar, euro British pound, is one of the currency pair that can be a bit tricky for traders to trade, okay? Why? Because it's the puppet of the euro dollar, okay? So when the euro dollar is going up, okay, the euro GBP very often will follow the euro dollar. Sometimes you will see that this currency pair will go in the opposite direction of the euro dollar. You may be wondering what's going on, but this is due to the hedging activities in the financial market. All right? But sometimes traders will go and trade the Euro GBP, which I'm doing now, okay? But because so far, as I was recording this video, I did not show you anything about the Euro dollar, okay? The challenge that we face that sometimes you are trading the Euro dollar, you see a trading setup and you are trading it, okay? If it is a bearish trading setup, okay, you are trading the Euro pound, you are trading the Euro pound, Euro British pound, you see a bearish trading setup, okay? So you start selling, okay? If later on the Euro dollar start going up, that may force also the Euro pound to start going up. But at the beginning, there was a sell trading setup. But now the Euro dollar start going up. And because the market is now very, very bullish towards the Euro, everybody is buying the Euro. So the Euro pound, the Euro British pound start going up. But primarily, we have a bearish trading setup, and traders end up losing. On that note, I want to show you, okay, let's move on now to the next step, which means whenever we are trading this currency pair, we need to pay attention to the Euro dollar, okay? Otherwise, we may see sometime that, okay, the music has changed. So this is the Euro dollar, okay, on the 3-minute time frame, it's going down nicely, but now it's now forming a kind of higher lows here on the 3-minute time frame. So if the Euro dollar starts going down and the market becomes very bullish towards the Euro British pound may benefit from that also. All right, but I want to show you something for the Euro dollar on a daily chart. The Euro dollar went down and is now retesting the edge of this blue trend line. How I want to show traders how I draw this blue trend line on a daily chart of the Euro dollar. I'm connecting the low. All right. Right here, where I place my vertical line here on the daily chart. Okay. Quickly, I want to check something quickly, traders. All right. I'm connecting the low of the 2nd of March 2016 to this low here of the 29th of March. Okay, so you see the low here and this low. That's how these 2 points I joined them together. That's how I'm doing. So today the Euro went down to retest that trend line. And some traders who sold it are taking profit here. All right. So the Euro is at a hot spot trading zone right now. Okay. But there is something else. Is because, all right, the professional know that tomorrow we have a lot of high impact economy news. So though the Euro is at a hot spot trading zone, they are a little bit careful to buy the Euro, okay? So we need to understand that tomorrow we have a lot of high impact economy news that is playing on the mind of professional traders, okay? Let's go back again to the Euro British pound and see whether my strategy is working or not. Okay, all right. I know traders love this very much. All right, so we are still here. It's bouncing here, but we are still in it. All right. So some trade I may move my stop loss, but for this trade I'm not going to move my stop loss. And 21 pips, and that's it. Okay. The reason is that if they take me out of this trade, I'll place another trade if there is an opportunity to sell again, all right? So instead of moving my stop loss, I prefer to take small losses because I'm prepared to enter the trade, okay, at another key level, or if there is a chance to sell again, I want to sell again, okay? So I will not move my stop loss, okay? It's better to take small losses than bigger losses, isn't it? Okay, so now we are back below that level 8001. Ladies and gentlemen, it looks to me that this video is going to be quite long, and I don't want it to be quite long. And we have been talking now for how long? For 40 minutes, okay? So in order to control the length of this video, I will place my mandatory vertical turquoise line at the point where we are about to pause the video, and I will also show you the time in London is 9 minutes past 4 p.m. in New York 9 minutes past 11 a.m. Pausing the video for the first time after 40 minutes recording, and I will come back to it to show you whether I've been if they are about to kick me out of the trade and I'm still sitting here, I will come back quickly and show you that, so you may see live how I've been kicked out of my trade. All right, I mean this trade here, all right, or if I'm going to get paid. But before we go, there's one more thing I want to do. I want to set a target for my trade, okay? All right, I want to set a target for my trade because I enter here and I want to set a target because my trading setup is from the hourly chart. I'll go to the hourly chart to set my stop loss, okay? To set my profit target, okay? My stop loss is already at 8010. I want to set a greedy target. Now, this to make you laugh a bit. Okay. $7,965. That's not bad place to take profit. 65. Yes, we take our profit at 796. Okay, I'm going to be a little bit greedy. Okay, we take our profit right here. I'll color into orange. All right, we'll see what's happened. We set our profit target at 7962. Okay, at this low here. Okay. 7962, we'll take our profit here. But if the market is too slow, all right, and we go into the gap period, I may have to take a lesser profit, okay? All right, so 7962, our profit target, our stop loss at 8010, entry at 7989, using the area way principle that stated that the minimum price move is 3. Pausing the video for the first time, and I will speak to you very soon. Okay, traders, let's continue. It's going down. Okay, so far you can see we paused the video here a few minutes ago, and it's going down. The reason why I want to resume the recording now is because I want to sell it again. All right, so I'm going to remove some of this line here, and I want to place another limit order just a little bit below this high here. All right, I'm going to place it carefully here, all right, to sell it at 7991. That's my new limit order, which is not yet filled. Okay, the reason why I'm doing this is because the price went up a bit, all right, so giving me another chance to sell again, okay, at a higher price level at 7991 instead of, so we are already in the trade at 7989. We did not close that trade, we are still in that trade. Now I'm placing another limit order just a little bit above, okay, my first order here at a 7991. Okay, this order, as soon as it's filled, I will come back and place a stop loss. In fact, I can do it now. Okay, set a stop loss for this trade, but I will wait. Okay, I'll wait until it's filled first, and then I will set my stop loss for my second trade. The reason is that the price went up. In fact, it's looking very bearish. I may sell it again for the third time, and because of this pattern here, you see this candle here, this one here. Okay, it's quite a bullish candle, but look what's happened after that. It's just down. It's a bearish candlestick pattern. When you see some time like that, you see a bullish tall candle, and then all you see is just they will sell it all the way down like this. Okay, I'm not talking about the higher time frame. I'm talking about the lower time frame. When you see that this candle here, very often you see the price will go up in normal direction. So probably going in a diagonal move, and then suddenly you see a tall candle at the top like this, and then it's all down. All right, it's telling you that they just place this. It's telling us that this tall candle just brought the price to the butcher, so to speak. He brought it to the order here to be filled. So sometimes there are orders being placed before the price will be pushed very fast to fill those orders. So market makers must fill orders. So if orders are packed somewhere here, sometimes you may see a tall candle push it there to fill the order, because it's a sell order. The next move after the bullish tall candle is all sell, because the order to sell has been filled, and the tall candle, the purpose of this tall candle is only to fill the order. You understand? Okay, the opposite is also true in a downtrend. Sometimes you see the price will be going down in normal direction, and then the next thing you see, I'm talking about the lower time frame. All right, you see sometime on the lower time frame. Okay, 5 minutes, 50 minutes, and then you see price going down normally, and then you see a tall bearish candle down. Now that tall candle bearish bar sometimes will be, the purpose of it is just to bring the price to X level to fill a buy order, because we are in a downtrend. Now a tall candle, because the price is slowing down. Okay, they want to sell at a specific price. Okay, they want, or in this case, they want to buy at a specific price, but the price is slowing down. Okay, so now push to fill the order. And which order is it? If it's a bullish order, you see after that small bullish candle printing out gently until we come to the high of that tall candle. All right, so we have a similar scenario here, 1 2 3. All right, then you put back a bit, and then blah blah blah. Now this candle here, look, after this tall candle, what's happened? Down. Okay, so that give me a bit of confidence to sell here. I may sell it again. All right, but let's not be too greedy. Okay, let's not be too confident. Okay. All right, I'm removing my lines now. I hope you learned something for the video also, and we'll put into use. Okay. All right. Okay, so now we're going to pause the video again for the second time. I have a limit order here. It's not yet filled, and once it's filled, I'll place my stop loss, my second stop loss, somewhere here. But before we go, the time in London is 24 minutes past 4 p.m. In New York, 24 minutes past 11 a.m. Speak to you soon. Pausing the video for the second time after 49 minutes recording. Okay, traders, we pause the video here where I place my turquoise vertical line. You can see that the price went up a bit, all right? And now it's back here. And my second limit order is now filled at 7991. Okay, so because this is my second trade, I want to see where I can place my stop loss. Okay, I will set my stop loss 7991. right here above this high here at 8005. Okay, 8005. That's 05. That's there. That's my second stop loss. I'll color it also in turquoise. Remember, our first stop loss is at 8010 for the trade that we entered at 7989. Now we have another limit order that has been filled at 7991, and I'm using for that 14 pip, 14 pip. The first trade was 21 pips, stop loss at 8010, 21 pips. All right, and the second trade at 7991, we are using a stop loss of 14 pips. All right, this is what I tend to do when I'm taking more than one positions for a trade. I want, as I'm going to take more trade, I'm reducing my stop loss. So the first trade will have a higher stop loss in comparison to the second trade, because if they take both trade out, all right, if I have a bigger stop loss, that will be a big loss. So I'm trying to, the second trade, I try to have the stop loss lower, lesser than the first one. Okay, so I'm now in two trade. Can you believe that? Okay, for the Euro GBP, and my target is still at 7962. All right. So to avoid that the video is too long, all I will do now, I will just pause it and wait until I get paid. All right. So pausing the video for the third time, yes or no, all right, and I will come back to it. All right. The time in London stock market is now closed. It's 31 minutes past 5 p.m. in London. In New York, 31 minutes past 12 p.m. trading the Euro British pound. Okay, the strategy that we are using is about the interpretation of the Elliott principle. Okay, the minimum price move is free. We have seen, okay, that the price, okay, was going down in 3 moves on the hourly chart. We switched to the 3-minute time frame, combining the hourly chart and the 3-minute time frame. We have noticed that the rally to retest the prior, okay, low on the hourly chart was a rally on the 3-minute time frame. So 1, 2, 3, same rule, minimum price move is free. Finally, you can see that I placed my limit order here to sell. That order was filled, but for one reason, the price quickly went back above, okay, the prior high. Okay, so now it has 1, 2, 3, 4, 5. All right, move. Now it's coming down. Will it continue to go down and tag my targets? Pausing the video for the third time, okay, and I will speak to you very soon. Okay, traders, just to update you guys about what's happening here. We paused the video here on a 3-minute time frame right here, and you can see that it went down and it went up, and we are expecting it to continue to roll it down. Hopefully we'll reach the target level at 7962. It has been a bit slow move down, because this is normal, talking about the characteristic of the Euro British pound is quite slow. But I need to tell traders that this currency pair can be tricky if one is trading it due to the hedging activities. Traders that are buying the euro dollar may just sell the Euro British pound to protect their bullish trade in the euro dollar. All right, and sometimes when they are selling the euro dollar, they may just come and buy the Euro GBP or Euro British pound as an insurance for their bearish euro dollar trade. All right, so can be sometimes tricky to trade this currency pair. I noticed that a lot of traders may go and trade this, because when you are trading this currency pair, you need to keep your eyes on the euro dollar, which can sometimes influence this currency pair, I mean, in a negative way, because sometimes you may see a bearish trade set up, and then the euro start rising, and this currency pair will just change direction. So it looks easy like this, but okay, it's not my favorite, okay, currency pair, all right? So better trade the euro dollar or the Australian dollar, all right? Australian dollar, US dollar, okay? But this currency pair can be a bit tricky, okay, sometimes, all right? And it's not quite fast as the euro dollar, okay? Except during a high impact economy news. So when you are trading any financial instrument, you need to understand the characteristic of that financial instrument, okay? So you may apply the correct, okay, stop loss, okay? So I will pause the video again for the 4th time, all right? And just to update you until I get paid. I don't know how long this will take, my friends, but I'm just being very, very patient, okay? 2 trades we have open so far, all right? So my stop loss are safely here, all right? So just hold on and we'll see whether we get paid, okay, at the target point or before that, okay? So speak to you soon. Pausing the video for the 4th time, but before we go, once again, the time in London is 43 minutes past 6 p.m. In New York, 43 minutes past 1 p.m. on the 12th of April 2016. Pausing the video after 56 minutes recording, okay, and I will speak to you very shortly. Okay, traders, we pause the video here. As you can see, since then, the euro British pound went up a bit, came back and went up all the way to the entry point. Now it's going down. As you can see, it has been a long time now. New York is now closed, but the forex market is not closed. So we are still in this trend. As you can see here, the time in London is 39 minutes past 9 p.m. in London. In New York, 39 minutes past 4 p.m. So far, this is what has happened so far. And we are expecting the euro British pound slowly but gradually to come down to the level of 7962, where we are expecting to close this trade. We will see how, okay, everything, okay, will proceed, all right? So this is it. So far, so good. Okay, the price now below our entry point. That's what we want because we are selling, okay, the euro British pound. Okay, so I will pause the video again. All right, is it the 5th time? All right, so we will come back to it and update you guys and see whether, okay, it's going down nicely. One of the reasons also that the price couldn't change direction here is because we need to be very careful, because if London is closed, very often we may see that the price may change direction. Very often we see a reversal at the point when London is closed. But because of the economy news that are playing on the mind of professional traders, talking about tomorrow, all right, tomorrow we have a lot of high impact economy news. It looks to me that, okay, no one is taking position, so the price is just continuing to go down. That's why myself, I'm quite happy to let this trend on up to this point in time, okay? So, pausing the video for the 5th time, and then we will come back to it to update you and show you, okay, where is the euro, okay, British pound is heading, okay? So speak to you soon. Okay, traders, just to update you guys about what is happening here. We'll let this trade on, all right? As you can see, we pause it right here. And you can see it went up a bit, all right, and it's still going down. All right, I'm still on a 3-minute time frame, all right. So what has happened? You can see that the price has formed a head and shoulder chart pattern near the red, near the 8001, the key level, okay, on the hourly charts, all right, and it's just going down, okay. It's working beautifully. It's now approaching our ultimate target at 7962. I don't want to close those trades yet, okay. I will let them run, okay. But right now is the Asian session, all right. It's 11 minutes past 2 a.m. in London, all right. This is the Asia session. And as you can see, the forex market is usually very quiet during the Asia session. And they just rolling it down, all right. But I will not close this trade because of the major economy news that I do tomorrow, okay. So let's pause it again one more time, and I will come back and wrap it up. Okay. Speak to you soon. Okay, traders, as you can see, the Euro GBP has finally crashed down well below our target, as you can see here. All right, so has been a long trade. We paused the video right here, and you can see that the price went up. I can explain to you why I'm out of these two trades now. Has been profitable trade. Look how it's crashing down here. By the way, because we let this trade run through the night, through the Asia session, and today is now the 30th of April 2016, and the time in London is 10:19. You can see that it London opened today again. The Euro British pound was going up. The reason was that the euro dollar was going down also. So traders that were selling the euro dollar were buying the euro British pound as a hedging, okay, to protect their bearish trade for the euro dollar. I don't know whether you understand, because when we are talking about hedging activity, okay, those are not real trading. So you are buying one currency pair and you are just selling another currency pair, okay, to protect okay, your trade. All right, so I want to show you the euro dollar now, because the euro dollar, as you see, was just going down, and just going down non-stop. Okay, and so traders that were selling the euro dollar this morning, okay, some of them were buying the euro British pound to protect their trade. All right, but because of this is what I'm saying to traders, the trading setup will determine our trading strategy. So since yesterday, our trading setup was in place, and nothing has changed. So we cannot, okay, this is what I'll show you. So we started everything here. We say, okay, the price went up, okay, then we see this consolidation here, and then came down 1, 2, 3. All right, according to the Elliott wave principle, the minimum price move is free. Okay, all right, very simple. So it's a market stable data, very simple. Minimum price move is free. All right, so we draw a line there, which is the red horizontal line at 8001. Okay, so if the minimum price move is free, after 3 waves, either we have a reversal or we have a continuation. Okay, so in order to have a continuation, the price must find a resistance at the prior low, which is this one here. So we say 1, 2, 3. All right, if the trend should continue, the price should rally up a bit, all right, and then find a resistance at the prior low. So the prior low is this one here. Then you find a resistance, yes or no? I just pushing it, find a resistance. There were a lot of blah 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 on the 3-minute time frame, down on the hourly chart, and now here it is. It's trying to go up again, forming this dodgy double bottom here. And nothing has changed. I just push it back down. Now, okay, there is a high chance that we can buy again now here, okay? We can look for opportunity to buy here because, okay, there is another reason for it that we can look for opportunity to buy here now. All this move down probably will quickly go back up again, okay? It makes sense? All right, this is the end of this video, all right? I hope you have learned something from it, all right? We put it to use, okay, to make excellent day trading or swing trading decision. The most important thing, which I say to traders, do not skip, okay, one step. So we learn it, okay, or discover something new for the first time. Use a demo account, practice until you master it before you go live, okay? All right. I also mentioned to you that you see how the price went up like this. We divided two. If it failed to find a support here, which normally should find a bit of support, bit of rally here, the price may come back down all the way here. Okay, that remains to be seen. So step by step, break below. Now it breaks below the 7962, which is our target. Now here we link rally up to retest it and go do the same thing again. One should not assume anything, because today, as I was telling you, we have a lot of high impact economy news. That's why I was quite happy to stick around, because I know that a lot of professionals are very careful. They will not dare to push it too far, because they are expecting economy news today. All right, so here we are. It's now down. Successful trade, as you can see. All right, enter at the first trade. We enter at the first trade. Okay, right here. Okay, at 7989. Stop loss at 8010. Second trade at 7991, and stop loss at 8005. If you have any question, put it in the comment section. If you have any suggestion, put it in the comment section. All right, and in due course, we'll record another video, to answer your specific question. We are the TSTW24 traders, talking about the application of the wave principle for forex trading. Speak to you soon.